Hey guys, how you doing? Today is March 17th, and seems the market, no matter is in US or in Europe, then the stock market becomes more calm after both government then they bail out for SVB Bank and Credit Suisse. The problem for those banks, if you just by looking at the financial report, then you may see that all goes well. Right? All goes well, seems okay, right? Just less revenue. But a lot of banks, especially like the business nature of Credit Suisse, previously in Lehman Brothers or insurance international company, then they have a very, how to say, very big potential risks, but they didn't tell you, or they pretended not to tell you very honestly in the financial report. And then they wish the situation will not happen. So every month they can receive the money, and they named it as the insurance income peacefully, right? That's what it is, right? That's what they're thinking. Actually, before Lehman Brothers explode, all goes well, right? Before AIG is nearly blew out, then all goes well. But the point is like that, right? So I'm not ruling out that more bank in US or in Europe then will have the same situation as Credit Suisse or SVB, right? And yesterday, the First Republic is being backed up by more than 20 banks in US. And then you can see that the situation is quite extreme. And then just the market now is more calmed down because government's coming out and then they bail out that, okay, all goes well, then we'll bail out, right? But how about if more bank explode? If more bank in US explode, if more bank in Europe explode, and then will the government bail out all the banks? No. But the key point is if you invest in the stock or the bonds of those banks, then do you know that they have that potential risk? Maybe you don't know. Or maybe just they think they will make you think that yes, we have those investments, but they are very safe, right? The world will never change. Honestly, this is not. That means your income over 1 year, then may vanish in just one time. A lot of people that they invest in Lehman Brothers, they earn a lot of money in between, but only one time. Then they lost all the money they earn, and they lost more than what they earn. And we're lucky this time, Credit Suisse, she did not issue bonds like Lehman Brothers before. They just have the CDS. I think it's because after Lehman Brothers, the control of the US government is very tight. Just eased by Donald Trump a few years before. Not as bad as before. So less people is being affected. So if Credit Suisse is like Lehman Brothers, issued a lot of small bonds, then those bonds may down to zero. That means not worth a single dollar. So a lot of people may jump off from the building, right? Because they invested a lot of money on that. A lot of Hong Kong people at the time, they invested, and then they are being misleaded or misguided by some of the bank, some of the investors. They bought a lot of Lehman Brothers bonds, and then they lost. Some people they lost more than 20 or 30 million Hong Kong dollar. They lost the building, they lost the apartment, they lost everything, and some of them jumped off from the building and then passed away. So this time is better. So, but it does not mean that this financial crisis is over. If you are still putting on the interest rate, because of the inflation, then more will come, right? So today we take a look on the Credit Suisse finance report, right? I'm not saying that they are cheating, not cheating, but they did not tell you the truth. But that truth is very important. That means if that happens, then will make all your investment become zero. They should tell you, right? But they did not. That's the problem, right? So our Falcon portfolio now is 51 months already, and then we just like taking up on an elevator, and our investment rised back to 53% yesterday. So if any of you have any questions, then and I can answer, then you can email to me by usstockmarketweekly@gmail.com, or you can leave your question under the YouTube. And this is our coverage. Credit Suisse is fooling investors with numbers for a long time already. They show you the numbers. But those numbers is not reflecting more than 10% of the investors' risks they are taking. I show you the numbers, no problem. But they did not tell you the truth. So I will explain it in my words in a minute. So yesterday, Dow Jones rised back 371 points to 32,000, right? And this time the earthquake caused by Credit Suisse or SVB Financial is not infected Nasdaq a lot, right? Because it's not too related to Nasdaq, and Nasdaq is dropped it for a long time already. And then Nasdaq been raised at 283 points yesterday. So this is our Falcon 350,000 portfolio, and we've been up back to 53%. And then this year our portfolio increased 15%. And this is the US 10-year Treasury, and then it goes down. Why it goes down? Right, because the people just losing the confidence, right? They lost the confidence on everything. They may hold the cash, buy some gold, even not on the US 10-year Treasury, right? They may not so believe it for a short time. And let us go through some news first, and then Wall Street rise to the rescue. Sorry, it's 11 banks. They agreed First Republic 30 billion in deposit, right? So this time is not, maybe the government is doing something in behind, we don't know, right? So we see that First Republic has a problem. Another 30 billion in deposit. More happens after the SVB. So I think that there's more to happen if Fed keep on increasing to put up the interest rate. And Yellen finally said, not all uninsured deposits will be protected in future bank failures. Just as what I said a few years before in Hong Kong channel. If more banks goes like that, what means uninsured? Uninsured means 250,000 US dollar for normal deposit, right? That means this time for SB Financial is exceptional, right? The government only bail out once. Second, by 11 banks. Third, no, right? So imagine if more bank like SVB Financial, then it will explode. That is the financial crisis, right? So don't be so happy. So if one or two more banks like that, the people will lose the confidence, and then they take out all the money, no matter is putting on Warren Buffett, on the bank, all of the unit trust, ETF, they hold the cash, and then the market will collapse, right? And Macron, French, and then she is overriding the parliament to pass the retirement age bill. That means the retirement age few years after will be from 62 to 64. So the government can save more money because it extended. I totally not agree this kind of tricks. All right. Because the country should go ahead on how to earn more money, how to increase the GDP of the people. It's not just by paying these little tricks, right? I know what you think. Not he think. He think is after 2 years, maybe I'm gone. So just by this 2 years, okay, then I'm okay. After I'm gone, not the president, not my business. So this is very unresponsible as president, right? No matter what, even there is a big difficulty at this moment, he should at the same time then raise out one or two financial solutions on how it can be improved in the coming few years, not just by overriding the parliament and then make this pass. Okay, done. Just for this 2 years. So after I gone, not my problem, right? So this is totally unqualified as president. And the French people, they should be thinking on why they elect this Macron as the president representing themselves, right? Am I right, right? They should be responsible for that because they elect him. And finally, the ECB then put up the interest rate by 0.5%. But they confirm, patch means confirm that they will impose all kinds of support if needed. I don't know what you mean by all kinds of support. Right? So if another Credit Suisse appears, then what should they do? Bail out again? Right, bail out again for weeks, then we'll talk about it in a minute. Because of the inflation, right, then if one or two more bank happens like that, then the whole economy of Europe will collapse, right? I'm not joking. If all the people then they lost the confidence, taking back all the money from the ETF, from the unit trust, from the bank, from the stock, right? And they just put the money in the bank or put it at home, buying the gold. The whole finance company will collapse. No money at the market. The economy will be freezed. It will be even more worse than the COVID-19, right? But what can we say, right? They have the authority. We don't have. We just normal people, right? So we take a look on the financial report of Credit Suisse, right? Just very short, maybe 4 or 5 screenshots, then we're done. Take a look on the past 5 years, the stock performance of Credit Suisse. AG means public listed company, right? AG. So you can see that in the past few years before the COVID-19, 2018, 2019, 2020, right? The stock prices also not perform very good. But after that, drop. 5 years before, the share price still have 15 Swiss dollar, and then yesterday $2. Right? That means you nearly lost all your money in her stock, and then they still give you 2.5% dividend yield. So this is joking, right? And then because of the stock prices rise back, so the market cap back to 8 billion Swiss dollar. So we take a look on the business that Credit Suisse is doing, wealth management, right? Wealth management may be for personal or for commercial, both will be, right? Investment bank, normally all the problem comes out from investment, right? And then Swiss bank is normal banking, retail banking, no problem. Asset management. So no matter it's asset management or wealth management, one may be for personal and one may be for commercial, right? And the problem now is for the investment bank. What they call it is the investment. But actually, to me, it's not an investment. It's just a very big bet. But they're not using the money. They're using the investor, the shareholders' money. So we take a look on the net revenue. 14.9 billion Swiss dollar compared with 1 year before, 22.6. Dropped a lot, right? Dropped a lot, right? And the provision for credit loss. This is ridiculous, right? What means ridiculous? In 2021, 4.2 billion. But in last year, 16 billion US dollar for credit loss. And then we know that the market value of Credit Suisse today is 8 billion. And then how much she borrowed from the government? 54 billion Swiss dollar. That means 7 times of the market value. So the bomb is very big. The bomb is 7 times bigger than the bank's whole value added together. Is it a big bomb? Yes. But why there is no provision for credit loss? Why? Because no way they cannot put it there. If they put it there, then all the investors may be frightened, scared, and then they're all gone. But finally, paper cannot walk the fire. Now exposed, so everyone gone away. Right? You see that the return on equity, 2021 already a negative, and 2022 more negative. So you can see that provision for credit loss so small, and then the net revenue dropped it. Why it dropped it? Why it dropped it? You can see that. I'll show you in the next screenshot then which part that decreased it sharply. So we take a look on the net loans. That means the net borrowing. 264 billion Swiss dollar compared with 2021, 291 billion Swiss dollar. All goes well, right? The net loans is less, right? The point is what they are doing on the CDS is not a loan. They do not call it a loan. What do they call? Some investment tools. The CDS I explained it in Hong Kong channel is like that. Two parties, A and B. B issued the bonds to A, and then A bought it. But A is worrying. If B has any problem, then my capital is gone, and then I will not get back the interest. So what should I do? I want to invest. Then Credit Suisse appears. And then Credit Suisse said, okay, you fool me. And then pay me the insurance fee every month or every year. I'll make sure then you will get your dividend and then get back your capital at the end of the period. And then Credit Suisse, she contact with B and then ask for some mortgage, right? Maybe your apartment, anything, we don't know, right? Maybe your apartment, then put it here for security. So if you goes bankrupt, then I can take your apartment or your building or your mill or your factory, something like that. I don't know what, right? So that is what Credit Suisse is doing for CDS, right? And that is not a loan, but that is a very big potential risk. What is the very big potential risk? Is CDS has a value in the market, right? And they put CDS in the market. A lot of people is betting on that. So if B is default, and then Credit Suisse need to pay the money to A, and then this may be 10 times or more than 10 times of the insurance fee that she is going to receive from A. God knows how much. God knows how much then she did it. and what is the security, maybe property that she got from B, we don't know, right? So that is a very big risk. But that is not called a loan, because that is not a loan. That is just like then you invest in a company, but the boss, I'm the boss, right? I'm betting with someone. So if I lost the whole company to you. But you don't know, right? You as the investor or the shareholder, you don't know. But one day, oh, you find out then I lost the whole company. And then all your money gone, all your shares gone, right? So this is a very big potential risk, but they never tell you. And then you will never saw it in the financial worksheet. They should put it in the very beginning of the report that the company is doing that kind of very risky investment. So the investor should decide if I put my money in this company or not. But they never do it. They try to not let you know. So you just see that the net loans. Why we need to know the net loans? We need to know the risks of we putting our money into this company. All right? We need to know that. So what's the figure of the net loans gives to you? Is how much this company is borrowing. Can she return it? Can she pay it back? What is the assets they have? If they hide up those things or try to make it less prominent, so the whole report is meaningless. The whole finance report is meaningless to the investor. Do you get me? So take a look on others, right? The net interest income, it is same as 2021. Commission and fee dropped sharply. Why? Because less company borrow money, right? Because US is putting up the interest rate, not good for doing business. Trading revenue, more negative, same issue. The point is like that the nature of this kind of ban is the market, the economy of the market must be good. You see that the net interest income is because of the property, right? They increase the property, the interest, then more interest income they got, but less business they can do because the property price, because the money then you have to spend on the mortgage is higher, right? So less people doing business, less people borrowing the money, not favor for the economy. And then at the same time, they are doing some kind of CDS, right? Insuring some people, then they may have a big potential risk. That is the nature of the bank, or to be more precise, is the nature of the investment bank, right? Did they tell you? No. That's the key problem of the business. You have to be very careful before you put your money in, right? So this is what I just showed you, the net loans, right? You see that the net loans of 2022 is less than 2021 because they are not calling this as a loan. And then we already know that for the net margin is negative. So for all the investor, they should sell or dump Credit Suisse stock 1 year before. Once they saw this, the net margin is negative, then should I still hold this stock? No. Right? So I hope all of them should be okay, right? So pay attention not only to the finance report. You should go and see the financial report. Even you do not know, if you see the financial report in between in 2022, in first or second quarter, if the net margin is negative, you should dump this stock already, right? But I really want to say that for those kind of bank, they should honestly tell in the first page or their financial report the risks they are facing, right? There's a big risk of that. So if you invest in our company, then you also have the weeks of losing all your money. So if you still invest in Credit Suisse, this is not your issue. You take the risks, right? But they are trying to hide from you, change the auditor, hiding the things from all the investors, then we are still safe. And then now we can see that they borrow the money 7 times of the market value of Credit Suisse. That means what they are betting on the CDS is huge. They cannot afford it. So if they cannot afford it, why they do it? Because the nature of the bank is like that. So you are putting your money into a very risky sector. Always pay attention to 2 things. The business, the nature of the business. Second, the finance situation. Both of them. Maybe you still do not have 100% safe, but at least you will be 80% safe. So if you put your time in the finance report, once you saw that the net margin is negative, then you should go. Right? This time, some of the investor or the shareholder are lucky because the government quickly come out and then bail out for the for all the money for normal deposit. But for the second one, that means maybe another bank have the same problem. ECB may not lend the hand, then you will lose all the money. Right? So very careful on those kind of bank and insurance company. Any of the company that doing on the investing, then you should be pay 200% attention on that. Try not to buy their shares. Avoid them. Right? So this is what I learned from the past more than 20 years. Right? Okay, then thanks for watching, and then please give us LCS, right? Like, comment, and share. Right? So how to press the subscribe button and then press the bell icon next to it. So whenever there is YouTube video uploaded, then you will know it. Right? Okay. So I wish everyone have a very peaceful weekend. See you next week. Bye bye.